One of the big things that's kind of in the news right now is the Federal Reserve and actually doing some interest rate cuts, right? There's been so many interest rate hikes in 2023 and, went up almost to 8% at one point in time. And now we're starting to see that, I guess, raising interest rates didn't really help inflation the way they might have thought, right? So they're going to be lowering that. And what I want to do is really provide some education for you guys as well, because the way that they're actually doing the interest rates right now, as far as how the Federal Reserve have been handling things, is not really that typical, right? So we definitely kind of want to talk about that and kind of unpack everything that what's going on with the interest rates and kind of what to really expect moving forward in 2024, and if that's going to really be a good time to buy for you.
Yeah, I mean, because I'm listen again. We speak to a lot of veterans, right? What is one of the number one, I guess, deferring issues that most veterans why they don't want to buy? Well, interest rates.
Interest rates, yeah.
Interest rates, right? So yeah, this is going to be very interesting. So can't wait.
Yeah, absolutely. Gets into the affordability and them actually being able to afford a home. So what the Federal Reserve is looking to do right now is they're planning for 3 rate decreases throughout 2024, right? So they talk about basis points and different things like that. And they're going to lower it 75 basis points, right? So now what is a basis point, right? We don't want to bore you guys with all of those gory details about how all this stuff is calculated, but we want to make sure that you guys understand, right? So they're going to do that 3 different times to lower it 75 basis points. So particularly what that is that's going to be 3/4 of 1%, right? So 0.75, right? So when we're talking about an interest rate of, let's just say, 1%, right? Well, lowering that interest rate 75 basis points, put that at, 0.25 of the interest rate, right? Just puts it at a quarter, right? So, that's what they're talking about when they're talking about basis points. However, what is very important to understand is that when you're talking about mortgage rates and what they're actually lowering, it has a cause and effect relationship because the way the market interacts, but it's not exactly that they're actually lowering mortgage rates directly. And that's what we want you guys to understand.
Yeah. So and again, that's again, I just want to make sure that we provide clarity, right? So I understand when we're talking about the Federal Reserve being able to lower interest rates, what is that particularly lowering for the most part?
Absolutely. So great question there. So what they're lowering is the federal fund rate, right? So the rates that they charge banks to borrow money. That's what they're lowering. So they're lowering that. So if the banks are getting charged a certain percentage to let you borrow money to, buy a car, right? Or, credit card debts, different things of that nature, and even for your home loans, right? So if they're being charged a certain amount, then they're going to charge you a multiple of that number. Okay, so typically that federal fund rate that they're lowering is connected to like the 10-year treasury bond and that sort of thing. It's directly correlated to that. So the fact that mortgage rates went up so high, it actually went up way higher than it should have based on the level that they actually raised rates. So there's more videos that unpack that, and I don't want to go into that, but basically it's like the Federal Reserve was raising rates, and then the mortgage thing said we're going to charge double than what we should, right? So when they were charging 7% on a mortgage, they really could have still charged maybe 5.5%, different things like that, but they were just scared of what the market was going to be doing, so they wanted to make sure they had even more of a cushion in how much money that they were making for each of those loans.
That makes sense. That makes sense. I mean, because essentially, it's that trickle down effect that everyone talks about, right? So essentially, it is just when they're raising rates, they make it a little bit more difficult to borrow money, right? And having that aspect of things are not even more difficult, but more expensive. It becomes very more expensive now that they raise rates, but now that they're lowering rates, well, the banks are going to hopefully allow people to borrow money at a cheaper rate. which hopefully kind of trickles into the mortgage rates, correct?
Correct. It's definitely going to trickle down to the mortgage rates. And in fact, just the news of them lowering rates in 2024 before they even do anything has already had a trickle down effect, right? Because everything kind of runs with the stock market and different things of that nature. So now they're looking at it like, okay, so there's going to be less rate hikes. There's more confidence in the market. So we could charge lower rates. You know, we could feel more comfortable doing that. So rates have actually already started being lowered, even though the Federal Reserve hasn't actually started making those cuts yet. So if you're looking to purchase a home and you're looking to actually get ahead of that stampede of buyers that are going to be coming in the market, now can be a great time for you to do that.
No, true indeed, true indeed. Almost like the stock market, right? You get some news, it's either going to go up or go down. But this, the real estate market, the same effects, right? Typically, when we're talking about the Federal Reserve, okay, that makes a lot of sense. So with that being said, I think understanding the aspects, because you just said the stampede of buyers, right? So you're expecting as a real estate professional that there's going to be a market of a lot more buyers that are coming. It's going to be more difficult to purchase a home.
Absolutely.